All right, perfect. So welcome to episode 4 of Coffee and Crypto. I'm your boy, Vincent Owens, host of this call each and every single Tuesday and Thursday to get your mind, spirit, everything right. XDC is the coin. All right, XDC is the coin. That's the coin for today. XRP, XDC, and gold. XRP, XDC, and gold. That's the formula. XRP, XDC, and gold. And I'm going to in that order. So it's US dollar, XRP, XDC, gold. That's the focus from here on out. You ask Vincent Owens, what am I investing into? XRP, XDC, XLM, I ain't gonna give y'all all of them. XRP, XDC, XLM, gold. Okay. So let's get into the lesson today. Glad y'all are here. Yo, if you wouldn't mind, go drop the link in the Telegram. If you didn't do that, drop it in the Discord. If you're a part of the Vincent Owens Group, if y'all don't mind, go ahead and just letting people know that we're on the call. If you can go to my Discord, private Discord group, let the team know that we're on the call. Let's blitz real quick. And if you're not a part of that group, that Discord group, I will talk to you later at the end of this call on how you can become a member of the Vincent Owens Group, join that Discord group, and have access to other private calls that I'll be doing for the community. What up, Tyrell? So let's get it. So I'm gonna go ahead and share. Appreciate y'all for sharing that. Thank y'all. All right. So what I'm about to do is we about to jump. We about to dive right in. All right. So I dove in the rabbit hole this morning, and I ain't know what. Again, I ain't even come here knowing what I want to talk about, but it was fitting when I was looking at the digital asset investors page this morning on Twitter. So that's a gem. This is a guy that you want to follow. Digital asset investor, and turn his doggone notifications on. Follow me on Twitter at the Vincent Owens, and turn the notifications on. Like, you got to get into habit of that, because a lot of the time algorithm is off on these social media. So you follow people, but you barely see their content. And the reason why is because you're not completely plugged in with them, because you didn't just hit the bell. So, if you follow me on Instagram, just real quick, go hit the bell. I give gems on Instagram all day, every day. Go and turn on the post notification. That way you don't miss posts. Go to YouTube, I turn on the bell for any and everybody that I want to follow, so that I get direct updates to my phone when they post something, so that I can make sure that I'm up on game. All right. So digital asset investor, what he talked about, that was kind of interesting.
Look, the people that love crypto
was this video right here. All right. So if you're a person that loves crypto, all right, I want you to listen to this. It's entitled XRP, XLM, and gold. Success leaves clues, and rich people leave clues. Right? Success and rich people leave clues. These some rich people. Let me show y'all.
Look, the people that love crypto and the people that love gold are really, they have the same mindset, and I get it. This is proven, and I'm sorry, but when I read that 1996 NSA white paper, which is a government agency on how to create a mint, describing this whole crypto market, and I look at Wall Street and I look at the level of adoption, one thing I know, I'm not an engineer, I don't understand cryptos, but I have studied currency life cycles and their transitions into new currencies since 1987. And every single time, there are repeatable patterns. And a key one that I would say is that they allow people the general population, to make money as they're making this transition, so that people go along with it. Look at the roaring 20s. Look at the greedy 80s, and look at the 2020s. That's a common thread.
It's interesting, and that's something that E.B. Tucker, another one of our guests who says that they're almost preparing us for the coming digital dollar. Is that Is that how you see it?
100%.
And how far away is that reality for you?
Listen up.
You know, what I know, timing is the biggest challenge. But what I do know is that a lot of things have to shift in 2023, including somewhere around 610 trillion in notional derivative contracts that are tied to LIBOR shifting into SOFR. And they're forcing that shift, even though when they ran that test in October, I think it was 2019, might have been 2020, I'm sorry about that. But when they ran that test with 80 trillion, it was a big fat fail. And you know that because it got really silent. And then 3 weeks later, they postponed it until 2023. And LIBOR does not work like, or rather SOFR does not work like LIBOR. So, you know, I hope we have more time than that, but I could definitely see a crisis maybe a little bit before 2023 or in 2023.
Uh-oh.
That fast tracks it?
Mhm.
Okay. I'm gonna play it again because some of y'all didn't even take the proper notes. Like you came here. I'm gonna show you exactly how I study, right? I broke everything I'm gonna show you today. I broke down from this clip, right? This clip changed my whole perspective for crypto. And it let me know that I'm still in the right space. I'm just early. So some key words. She said LIBOR, right? And I'm like, LIBOR, what the hell is LIBOR, right? Well, you wouldn't know what LIBOR is because LIBOR has nothing to do with our day-to-day life, but it has everything to do with our day-to-day life when you're an investor, right? LIBOR is connected, was birthed through JP Morgan Chase, right? And I got documentation. LIBOR was something that was completely made up, that they was trying to send money as investors, millions and billions of dollars from the US over to a whole different country. The problem is that the old system, it had to go through all these central banks and blah, blah, blah. And they still want to do this. They still have to do this. But getting rid of LIBOR is a part of ISO 222. If you wonder, that's why JP Morgan Chase are a part of ISO 222. See, it's really starting to reveal itself and the elites are starting to speak to us, but most of us don't even really have our ear open. So I'm gonna play it again and I want y'all to listen and then we're gonna dive into the rabbit hole so deep. When y'all leave here, you're gonna look like a deer with the headlights. You know what I mean? When the eyes be all big, that's how y'all gonna be looking at the end. Let's go.
Look, the people that love crypto and the people that love gold are really, they have the same mindset, and I get it. This is proven, and you know, I'm sorry, but when I read that 1996 NSA white paper, which is a government agency on how to create a mint, describing this whole crypto market, and I look at Wall Street.
So 1996 NSA, right? Got to look that company up, NSA. And I found something else. And I'm like, yo, I'm about to blow y'all mind today. Like the government, the government created crypto. Wall Street wouldn't invest into it. Big investors wouldn't invest. Who created Bitcoin? The government. That's my theory. Again, hey, they might come for me. I don't know, you know what I mean? But I'm ready. I don't know, I'm just a civilian that's deep in the rabbit hole. All right, let's go.
And I look at the level of adoption. One thing I know, I'm not an engineer. I don't understand cryptos, but I have studied currency life cycles and their transitions into new currencies since 1987. And every single time, I mean, there are repeatable patterns. And a key one that I would say is that they allow people the general population, to make money as they're making this transition so that people go along with it. Look at the roaring 20s. Look at the greedy 80s and look at the 2020s. That's a common thread.
It's interesting, and that's something that E.B. Tucker, another one of our guests who says that they're almost preparing us for the coming digital dollar? Is that how you see it?
100%.
And how far away is that reality for you?
You know, what I know, timing is the biggest challenge. But what I do know is that a lot of things have to shift in 2023, including somewhere around 610 trillion in notional derivative contracts that are tied to LIBOR shift.
So nostro derivative contracts are also known as, I believe, all right, and I'm gonna look into it, but I believe that's nostro vostro money. You know, I know we got some other nerds on here, so you know, like if I'm wrong, correct me. You know what I mean? But I believe that it has something to do with nostro vostro, which we know that's why XRP is the solution, because it provides liquidity to the market.
Shifting into SOFR, and they're forcing that shift, even though when they ran that test in October, I think it was 2019, might have been 2020, I'm sorry about that. But when they ran that test with 80 trillion, it was a big fat fail. And you know that because it got really silent. And then 3 weeks later, they postponed it until 2023. And LIBOR does not work like, or rather SOFR does not work like LIBOR. So, you know, I hope we have more time than that, but I could definitely see a crisis maybe a little bit before 2023 or in 2023.
So here's the thing, right? So it's a crisis coming, a whole crisis, like for real. And so as investors, diamond hands are so important. Like, don't get scared from FUD, right? Fear, uncertainty, and doubt. Don't get scared from FUD out of your positions. You know, like a lot of y'all are red right now in the market. A lot of y'all waited way too long to establish the faith, to get invested, and that's okay. But you gotta deal with this. It was your choice to get started later, right? I gotta be real. This is my show, so I'm gonna let y'all know what it is. It was your fault because you had 2012 when we heard about Bitcoin. I'm talking to me too. 2011, they talked about it. 2013, 2014. We've been new. It's our fault that we waited so long to get into the market, because smart investors buy low and sell high. So if we wonder why we haven't got rich yet, it's because we waited, right? We waited until that time. 2017, the markets took off and then they took a drop. You can look at every single market that was available back then, and they all went up. And then by 2018, they all tanked, right? Together. So right now we're experiencing it together. So only the strong will survive, honestly, you know? So if you're seeing this on YouTube, you know, are you strong? That's the question. Strong enough to survive. So XRP, XLM, and gold, that's the standard, right? Let's watch another video from the guy's page, and then we're going to dive into that rabbit hole I talked about, right? But we got to listen to this. So he said, we keep seeing this sold publicly as a turf battle between the SEC and CFTC, but every video I watch with officials from both agencies say that they've been working closely together back to Jay Clayton and Giancarlo, all the world's stage file. So these are all attorneys, right? Jay Clayton, these are all attorneys that's on the XRP and the SEC lawsuit, right? So where do these guys talk? They talk publicly on Twitter, because Twitter is a platform where you can speak your mind. That's why all the people who are doing big things go to Twitter, right? Because of this freedom of speech. That's why Elon Musk wants Twitter, or bought Twitter, so that the initiatives can be pushed even more to the general public, right? I mean, that's the way I see it. So again, if you see it a different way, we all are entitled to our own opinions, right? But here's a quick video of I believe two of the one of the CEOs of an exchange, if I'm not mistaken, and another person that's on the board of either the CFTC or the SEC. All right, watch this.
That's great, Mr. Chairman. as you well know, regulatory certainty is key or is crucial in any market, but especially in a new market. Could you share with us some of your thoughts, some of your work, and the CFTC's work with the SEC, particularly in regard to the issuance of tokens and their classification? For example, whether it's an investment contract, a utility coin, a commodity, a currency, or otherwise, do you foresee any additional guidance?
Wait, hold up. So let me stop us there, right? So he gave us a list of what they're focusing on. Listen up.
Of tokens and their classification. For example, whether it's an investment contract, a utility coin.
A utility coin. So he didn't say a meme coin. He said a utility coin. So that should let us know that the utility coins like XRP, XDC, and XLM, those are the ones, right? Because we're investing into coins with real world use cases. Let's go.
A commodity, a currency, or otherwise, do you foresee any additional guidance from either the CFTC or the SEC to provide further clarification in this whole new arena?
Absolutely. I think we can definitely foresee greater clarity and information coming out of both agencies. Not sure quite when, but I can tell you that working with the SEC on these issues and a whole host of issues has been a big part of what I do. I have the privilege of talking with Chairman Clayton often several times a week, but very frequently. And I know this is an important item for him as well. For our part, we have tried to provide as much clarity as possible. To your point, it's really important that people understand what the rules of the game are, and then they can innovate accordingly. We have made the determination, based on the SEC's determination that it's not a security or an investment contract, that Bitcoin and Ether are commodities falling within our jurisdiction. But really, the threshold question is largely whether something is a security or not. And that is the sole province of the SEC. And so once they make a determination, we then can take their determination, particularly if the determination is it's not a security, and then we can start thinking about it in terms of our own regime and trying to provide clarity around what people need to do in terms of complying.
All right. So y'all heard that, right? And so now,
that's great, Mr. Chairman.
Hold up. So now I got one more video. All right. And then we're going to dive into these documents and we're going to get up out of here. All right. Let's get it.
What's your sense here? And what's your low? What's your high? What do you think's really happening?
Look, Bitcoin has only been around for 13 years, and this is the first time that Bitcoin is experiencing a Fed tightening. And what we're seeing is Bitcoin, as well as the larger crypto markets, respond like the stock market, at least in the short run. Look, Andrew, everything is down. The stock market's down. The bond markets are down. Crypto's down. This is the Wall Street mantra at play. Don't fight the Fed. The Fed's raising interest rates. It's unwinding its balance sheet. Investors are selling their assets, including crypto, to get more conservative. But what's different about the crypto markets is they're open 24/7. They don't close. So they're more liquid than traditional assets. And we saw crypto sell-offs throughout the weekend and throughout yesterday. Morning.
What's your sense here? And what's your low? What's your high?
Right. So the crypto markets, they don't close. They're more liquid, right? They're a lot more liquid. So that's important to understand when it comes to money, right? Because here's the thing. XRP, there's trillions of dollars that's locked up in XRP, right? There's multiple. And so as the market cap grows, right, what's going to end up happening, and when they beat this SEC lawsuit, XRP is going to allow for that liquidity probably to be unlocked, and it's going to save the world, right? Because that's why we're going through what we're going right now. It's because, again, we've printed too much money, right? We've printed way too much money. There's too much money, right, printed, all right? And so that makes the valuation of the dollar go down. So some things that I'm looking at right now, all right, for myself. Let's see. So the first thing I did was I heard about the SOFR thing and so I'm diving through this rabbit hole. All right. And again, I don't have this stuff kind of organized. I kind of just pulled all these things up because I was researching throughout the morning. And so directly on JP Morgan's website, it says LIBOR Premier setting the stage for LIBOR Primer setting the stage for SOFR, right? So JP Morgan speaks with experts from its regulatory affairs, sales, trading, and research departments across the globe to unpack benchmark reform and its far-reaching implications, right? So a new benchmark reference rate, the secured overnight financing rate, right, is positioned to transform USD-based financial markets, heralding a transition from the London interbank offered rate, right? So LIBOR is one of the reasons why, as well as to why the US dollar, right, is the world reserve currency, right? So right now, the US dollar, what happened after the Russia attacked the Ukraine, right? Russia, China, and I'm not sure about other countries, but I know for a fact Russia and China, they focused on getting the ruble, right? And also the Chinese, the yen, all right? They focused on getting both of those off of being connected to the US dollar. A lot of the world trade goes through Russia, right? Because they have a lot of stuff up there that we need. And then also China. So with them breaking off and looking to go back to asset classes, whether it is Bitcoin, whether it is gold, silver, palladium, copper, whatever they chose, they're breaking off of that US dollar infrastructure, which devalues our dollar even more because we do so much trade with these countries, right? So SOFR, with the US dollar losing its value, that can bring in ISO 222, which is the new messaging standard for banks. What it does is it allows for a level playing field, right? Now it's not the US being the top country with all this money, but now a Nigeria can come in and have a fair chance in these markets. And that's what's happening. And that's what's wanted by these countries. Believe it or not, countries are tired of being the back end, right? So these countries who've been on the back end for so long, that's why you see them coming on the front end of this technology. That's why you see Brazil. That's why you see Nigeria. That's why you see the UK. You see all these other countries that are like, India. You see all these countries. It's like, you know what? Let's get in on this space because we've been behind. So the US, to me, it seems like has kind of like what's the term I'm looking for? Like the US kind of has they kind of like uppity, you know what I'm saying? They kind of uppity, like we're an uppity country, right? We've been blessed for a while with the system that we built off of a fluke, right? So there it is, El Salvador, Panama, Honduras, right? Those are other countries that are embracing, right, the digital financial sector of the world, okay? So I was going through this, and so it says the size, scale, and scope of LIBOR usage makes this shift arguably the biggest challenge facing the finance industry today. Embedded in the plumbing of markets over more than 3 decades, the reference rate evolved into an international standard rooted in everything from consumer contracts, such as auto loans, to 190 trillions of interest rate derivatives, okay? Continuing to go through this, what is LIBOR, right? From 1969 to 2021. Right? So born in 1969, I want y'all to hear this. LIBOR came on the scene when Greek banker Minos Zombangis, all right, I can't say that, a managing director at JP Morgan, legacy bank manufacturers Hanover Ltd in London, brokered a syndicated loan of $80 million. 10 months after the deal, on June 5th of 1970, manufacturers announced a second 5-year loan of $100 million bearing a fluctuating interest based on the 6-month interbank rate in London, which is LIBOR, right? LIBOR, the London interbank something rate, right? That's what it stands for. I have to find what the O is, okay? So the reference rate worked. It was originally organically into deals, pushing the British Bankers Association to officially embrace it in 1986 and established a governance system that involves asking traders across a host of panel banks to estimate each day at which level they believe they could borrow funds. Right here, this quote was crazy. It said LIBOR wasn't intended to become a benchmark for the entire market. It started out because a group of banks wanted to lend money to overseas clients back in the 60s, and no one had ever done a floating rate loan before. They just made something up out of their ass. They literally made something up out of their ass. Like they just reached deep in and said, man, LIBOR, we're gonna just come up with something. We ain't never tested it. And I told y'all last night on the Science of Success that anything that's not tested can't be trusted. They didn't test this. They just threw it in effect back in the 60s and said, we're gonna create LIBOR. We just gonna name it that. We're gonna lend billions and trillions of dollars to our overseas private clients, and we're gonna figure out how to do a floating rate loan. Like, what is that? So fast forward, okay? LIBOR is no longer fit for purpose. The 2008 financial crisis, right? 2008 would change everything for the benchmark built into the financial system over 3 decades. When Lehman Brothers failed, banks and regulators recognized the risks associated with the unsecured borrowing and lending transactions that support LIBOR submissions. Listen, unsecured borrowing and lending, their cryptocurrency will secure the borrowing and lending because we put it on the blockchain. Let's keep going, right? The key challenge with LIBOR arises from the fact that unsecured borrowing transactions between banks have declined since 2008, reducing the size of the underlying market, feeding into LIBOR submissions. SOFR, with its large range of observable transactions, will be a more robust, measurable, and reliable benchmark. Okay, now check this out. The problem with LIBOR, 500 million or less of underlying daily transactions. So they're doing 500 million or less daily transactions. Feed into LIBOR a reference rate for nearly $200 trillion of derivatives, loans, securities, and mortgages. There's $200 trillion locked up in LIBOR. They need to open that money up. Wall Street is crazy. They need to open that money up. Check this out. You got 1.8 trillion sitting in floating rate notes. You got 190 trillion sitting in derivatives. Let's go down to derivatives. 45 trillion in exchange traded derivatives. That's your interest rate options and interest rate futures. And then 145 trillion over the counter. Cross currency swaps, interest rate options, forward rate agreements, and interest rate swaps. This is where majority of the market sits. Then you got securitizations, right? You got student loans, autos, bank cards, right? Like, so you got all this money that's locked up in LIBOR. What they're trying to do is to get rid of LIBOR because SOFR volumes reliably remain between 700 to 800 billion on a daily basis, right? So that's why they want to switch over here, because it will unlock, it will help with unlocking that nostro bostro, that locked up money, that liquidity that's sitting inside of the Fed or the reserve, right? Inside the reserve. So let's keep going. because I still got time, right? It's a lot we can learn in an hour. So let's keep going. So SOFR is now, and this is March 30th of 2022, right? So SOFR is now the dominant index used for new transactions in trading and lending markets, have replaced LIBOR in 2021. So this actually is already in effect, right? So remember the lady who we were listening to on Twitter, she said that all these things are changing, right? So they're changing things that we don't even like kind of even understand, that they're changing things that we don't even really know. We don't understand. We don't really have a grasp on these things, right? And so I went here and I looked at this, and this is, I had to dig deep to find this, but I found it, okay? How to make a mint, the cryptography of anonymous electronic cash. So this was June 18, 1996, right? By the NSA, the National Security Agent Office of Information Security Research and Technology. Now, what did the NSA do? Does anybody know? All right, it's the cryptology division. Does anybody know, is anybody bullish enough where you know what the NSA did that actually allowed for Bitcoin to create its technology? Does anybody actually know on the call? Just drop a yes if you know. Drop a no if you don't know. I'm looking at the chat box. See if y'all know. No, 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 no. All right. Nobody knows. All right. All right. Well, let me educate you then. Let me show y'all what's going on, right? So check this out. I went to Reddit, okay? Because Reddit is credible, right? But I went to Reddit, all right? 1996 NSA paper on digital currency Bitcoin. NSA wrote a paper on digital currency in 1996. And then it says that's where I found the article, right? Then it said there's someone named Tatsuki Okamoto who was involved. The name is close to Satoshi Nakamoto, right? When arranged, who is the creator of Bitcoin, who arranged an anagram, if you will. As many as you know, the NSA is also behind SHA-256, which Bitcoin uses. SHA-2 is a set of cryptographic hash functions. SHA-256 is one of them, designed by the USA National Security Agency. I clicked on Wikipedia, all right? And what SHA Secure Hash Algorithm 2 is a set, and I know what this is because I went and got my blockchain certification, right? And so we have to learn about this. And so there's different hashing rates and different hashing things when it comes to blockchain, different blockchains. So for instance, Bitcoin runs on SHA-256, where it takes 256 hashes, right, to complete a block. So that's how you have the blockchain built for Bitcoin. Now, so it's a set of cryptographic hash functions designed by the United States National Security Agency. Hold up, let me come to the screen. That's heavy. That's heavy. That's heavy because why is that heavy? That's heavy because you got to understand. You got to understand this. You got to really understand this. You got to understand that the government is the reason. They developed the technologies that the companies needed to be able to actually develop this. If there was no NSA, there would be no cryptography. Without cryptography, there is no cryptocurrency. Right? Listen, hey, y'all, hey, folks over there sipping on the coffee heavy, boy. Hey, folks over there sipping on the coffee heavy. So, I mean, that's really what I got, man. You know, like, I mean, we can go deeper, but I mean, that's what I got. Now, one thing I want to do is I did say we were going to go through one coin. So let's look at XDC. Coin of the day. They just listed it on Uphold. So you can now buy XDC on Uphold. When I first bought it, I could only get it on BitTrue. So thank God they made it a lot easier for you all to be able to go and purchase some. All right. So go ahead and let's go to XDC. Lambo Oscar said go deeper. Hey, look, if y'all want me to go deeper, you got to pay me. You know what I mean? You got to pay me to go deper now, Lambo Oscar. You got to join the Vincent Owens Group. All right. I'm gonna drop the link soon. If you are interested, you can hop in and we can really go deep. Because look, I can go deeper. You know what I mean? But hey, you know what I'm saying? But check this out. XDC, 5 cents, baby. I've been buying since 1 cent. What's up? Where y'all at with it? I've been buying it since 1 cent. So, I mean, it's down right now. It's down like, let me see. It's down 3%. You know what I mean? But I've been buying it. You know, I've been buying it since 1 cent. Nah, my guy, I am not a part of the package. This has nothing to do with crypto nerds. This is the Vincent Owens Group, my guy. You know what I'm saying? Different package. So 0.05 is 5 cents. XDC network. All right, let's deep dive into it. So XDC, if you had caught it back in 2018, that's the price you could have got it for. Sheesh. 0.0006. All-time high was at 18 cents. So buying at 5 cents is still a deal, right? That's a major sale. That's a major sale. So what is the XDC network, right? Formerly called ZenFin Network, is an enterprise-grade EVM compatible hybrid blockchain. So it's the only and the first, well, I mean, not the only, but it's the first hybrid blockchain, right? Equipped with the, oh my God, y'all, this is crazy. I ain't never even read this. Let's read this. Equipped with public and private stakes and interoperable smart contracts, a highly optimized bespoke fork of Ethereum and JP Morgan's, oh my God. We rich. We rich. You know what I'm saying? JP Morgan's now consensus quorum. The XDC network reaches consensus through a delegated proof of stake mechanism, which is allowed for 2-second transaction time, near zero gas fees, and over 2,000 transactions per second. Sheesh. While the consensus mechanism is proof of stake and thus uses virtually no energy, validators have to perform a small proof of work when proposing a new block, which makes the network highly resistant to spamming. That's why it's a hybrid. As of April 11, 2022, there are a total of 203 master node candidates, of which 108 operate as validators, and the remainder operate as a standby validator. Right? XDC is the fuel powering transactions and smart contracts on the XDC network. At the same time, because users must stake their XDC to run validators and participate in block generation, it ensures that the network remains safe and secure. Developed by Princeton University's Pramod Viswam, can't say it, and Hash Laboratories Fisher U, right, and their team, both of whom serve as senior advisors of the XDC Foundation, right, will ensure unprecedented Byzantine fault tolerance, which is very important, by holding validators accountable for their actions. BFT, look, you got to go through blockchain to understand Byzantine fault tolerance, right? It's a way that, the blockchain is basically secure, okay? Who are the founders of the XDC network, right? You can go through here, right? But check this out. Here we go. Casterman had already spent over 20 years at Swift, right? So who is Casterman? They joined forces with Andre Casterman, who serves in a prominent leadership role for the network. Casterman had already spent over 20 years at Swift. We know that ISO 222, Swift is the model that was presented after the US dollars broke from gold. Now you got SWIFT going into ISO 222, which is the new protocol, right? So SWIFT leading various technology innovations in interbank payments, corporate treasuries, and trade finance. During that time, he established the institutional partnership between SWIFT and the International Chamber of Commerce and created the first digital trade settlement instrument. Currently, in addition to serving as a senior advisor to the XDC Foundation, Castman chairs the FinTech Committee of the International Trade and Forwarding Association, with a focus on helping banks establish trade finance as an investable asset class through use of data and artificial intelligence technologies. What makes it unique? So y'all got to get on CoinMarketCap and read. You know, I ain't gonna do all this reading for you, but you got to get on here and read, right? I just want to show y'all while I'm bullish. Then what do? I come over here, I go to the website, xdc.org. Let me check that one out. Look at that. It's their website. It's their website. It's layer one. Wow. Meaning it has its own blockchain. Check this out. XDC network is a layer one EVM compatible network, which means that it runs on Ethereum, will run on XDC. So what means what runs on Ethereum will run on XDC network. So if Ethereum never switched to ETH2, which still we waiting on, if they don't switch, that means that a lot of the apps will go to XRP. They'll start going to XDC. These companies will switch from one blockchain to another blockchain because there's a bridge, AKA Harmony. That's why hopefully y'all have Harmony. There's a bridge between the two. I mean, look, I ain't lying to you, look it up. The enterprise grade XDC network is compatible with ISO 222 financial messaging standards and can power a wide range of novel blockchain use cases. Wow. Wow. All right. So hopefully y'all go get some XDC because that was deep right there. I appreciate y'all for tuning in. I'm gonna stop recording now and I'm gonna stay live for any questions, concerns, comments that you all may have. This is the time for y'all. So appreciate y'all. And on YouTube and the rest of the world, we'll see y'all on episode number 5. Let's go.